Hello, I'm Brian, and today is November 14th, 2025. XRP is currently trading at $2.25. In the past 24 hours, more than 1.4 million XRP tokens, representing over $336 million in value, have been transferred from centralized exchanges to private wallets. This movement coincides with the launch of the first XRP exchange-traded funds on nasdaq. These events highlight ongoing changes in supply distribution and institutional access to the asset. Over the next hour, we will examine XRP's technology, history, current market conditions, regulatory developments, and community perspectives using verifiable data and public statements. XRP was introduced in 2012 by Ripple Labs as a digital asset optimized for cross-border payments. The XRP ledger is an open-source, decentralized blockchain that processes transactions in 3 to 5 seconds at a cost of less than 1 cent each. This efficiency stems from its consensus protocol, which relies on a network of independent validators rather than energy-intensive mining. Over 150 validators, operated by universities, exchanges, and financial institutions worldwide, maintain the ledger. Since its inception, the XRP ledger has closed more than 100 million ledgers without a single failure. The core use case for XRP is on-demand liquidity, a service that enables financial institutions to convert one currency to another instantly using XRP as a bridge asset. This eliminates the need to pre-position funds in foreign accounts, reducing capital requirements and settlement times. RippleNet, the payment network built around XRP, has processed billions in transaction volume and connects hundreds of financial institutions across more than 90 markets. A key standard in global finance is ISO 2022, a messaging format for payment data that will be mandatory for major systems like Fedwire and Target2 by late 2025. The XRP ledger has supported ISO 2022 since 2020, making it compatible with modernized banking infrastructure. Central bank pilots in countries including the United Kingdom, Colombia, and the United Arab Emirates are exploring the XRP ledger for tokenized assets and cross-border central bank digital currency settlement. On the supply side, XRP has a fixed maximum of 100 billion tokens. Approximately 55 billion are in circulation, with the remainder held in programmatic escrow by Ripple. Each month, up to 1 billion tokens may be released, but unused portions are returned to escrow. This predictable release schedule provides transparency. Recent on-chain data from platforms like XRPL Services shows exchange balances at multi-year lows, near 3 to 4 billion XRP. When large volumes move to private storage, the amount available for immediate trading decreases. Institutional products are expanding access to XRP. Canary Capital's XRP ETF recorded $58 million in trading volume on its first day, contributing to combined inflows across initial launches exceeding $240 million. Additional filings from firms including Franklin Templeton and Bitwise are under review. These funds hold actual XRP in custody, creating a direct link between traditional investment flows and on-chain supply. Regulatory clarity has improved since the 2023 U.S. court decision in SEC v. Ripple, which ruled that XRP sales on exchanges do not constitute securities offerings. Recent public statements from SEC leadership emphasize a constructive approach to digital asset regulation. Ripple has also announced RLUSD, a regulated stablecoin pegged to the US dollar, set to launch on the XRP ledger and Ethereum. RLUSD will be backed one-to-one by cash and equivalents, audited monthly, and used for compliant payment flows. Technical analysis indicates XRP is consolidating above the $2.10 support level. The 200-day exponential moving average sits near $2.35. Analysts at CoinEdition note that a sustained move above $2.69 could open paths toward $3.10 and $3.40. On-chain metrics from Santiment show declining exchange balances and rising active addresses, patterns often associated with accumulation phases. Community discussions on X provide real-time sentiment. Analyst Ripple Bullwinkle posted, "Exchange outflows of 1.4 million XRP in 24 hours align with ETF activations. Supply dynamics are shifting." Crypto economist added, "Projected inflows of $4 to $8 billion in coming weeks could interact with limited liquid supply." Bitalight observed, "Alternative assets are showing relative strength during broader market corrections." Partnerships demonstrate practical adoption. Santander uses Ripple technology for international transfers in Europe and Latin America. SBI Holdings in Japan integrates XRP for remittance corridors. MoneyTap, a mobile payment app backed by a consortium of Japanese banks, leverages the XRP ledger for domestic settlements. These implementations process real economic value, not speculative trading alone. The global remittance market exceeds $700 billion annually, with average fees around 6.5%. XRP-based solutions reduce this to under 1%, creating cost savings for senders and recipients. In regions with large unbanked populations, such as Southeast Asia and Sub-Saharan Africa, efficient digital rails support financial inclusion. Tokenized real-world assets represent another growth area. The XRP ledger supports issuing custom tokens, backed by securities, real estate, or commodities. Sidechains and the upcoming EVM-compatible environment will expand smart contract capabilities while maintaining core payment efficiency. Addressing frequent questions. The XRP ledger is not controlled by any single entity. Validators are permissionless. Anyone can run one, and the network continues operating even if Ripple ceases activity. Ripple holds escrow tokens but cannot alter ledger rules or reverse transactions. Historical context shows XRP reached $3.84 in January 2018 during a broad market expansion. The subsequent regulatory uncertainty led to multi-year consolidation. Today's environment includes clearer legal precedents, institutional products, and infrastructure upgrades. Looking ahead, ISO 2022 migration deadlines approach. Central bank digital currency frameworks are advancing. Exchange-traded products are live. Supply on exchanges remains constrained. These factors converge to support ongoing development of the XRP ecosystem. In summary, XRP combines high-throughput technology, regulatory progress, institutional infrastructure, and real-world partnerships. Exchange outflows, ETF inflows, and standards compliance create a multifaceted foundation for its role in global payments. If this overview was helpful, like the video, leave a comment with your thoughts on digital payment efficiency, subscribe for future updates, and share with others exploring blockchain applications. This is not financial advice. Always conduct your own research and consult qualified professionals.